Hey everybody, just doing a quick little market update for Bitcoin. So tomorrow is Thursday, so big numbers coming out for GDP and initial jobless claims on the US side. Watch for that volatility. I think it's going to start tomorrow leading into the Friday options expiry, which is still 08 UTC. Going into Bitcoin specifically, we've had a pretty nice move with the long shorts. We're back at majority long. It's because we've had some local breakdowns, but as we've gone from below 50% to back above majority long, nothing has really changed in the overall price action. We're still in the localized range, and we did a bit of a fake out, which I'll show in a sec. On the funding rate side, funding rates are starting to come in a bit more bearish. They were very negative yesterday and earlier this morning. They've now become a little bit more positive, but not anything wild yet as far as like the actual pain of it. Still generally bullish. The more positive they get, the more they'll start influencing some price to potentially have some retracement. On the liquidation side, yeah, there's a really nice block right above us. Obviously, this has been farmed out for the last couple of days. We've been doing kind of a flat top triangle in the overall structure here. But if we look at the liquidations specifically in like the grand scheme of things, one thing to kind of notice that sticks out is overall what we've been doing here is that we pop the highs, go flat and sideways, and then now we've built back some of the local liquidations. When now there's about a pretty big liquidation gap, where there's a very low liquidation zone up all the way to 91.92. Now, that being said, in the local stuff, if we make any new lows off of what we just did, probably losing 86.3, we had a wick down. We didn't actually take too much of it. We have another wick down. I think we had come back towards 84.5. It's still kind of like the potential target. However, this is definitely a wick, and we're still trending the upside until we have a secondary loss of what we just did, which would break us further down. And then we could probably target 84 if we can actually clear this structure from last weekend. On the liquidity side, in the heat map and the order books where everything is at, we had a bit of a spook earlier when these things got pulled. Price dipped down really quickly and then had a bounce, and the bounce move's actually being supported as all of those big orders, a couple over 100 million, was pulled briefly to let price dump through some levels, grab some liquidations, and then as soon as price started reversing, you saw a big block of these, couple $100 million. God, there's a huge one here. Uh, right up to like 86.4, 86.3. So this is still going to hold price and potentially push price higher. Watch this. If we start losing that low at 86.3, basically this low that we already did, I call this a deviation until we have some secondary losses of this 86.3 level. Going over to the chart, right, so from yesterday to today, we had a nice little pop back up, failing off of the highs. Nothing too crazy to say about that. Your effective range is this. Basically 4-hour structure just being respected quite nicely. Nothing too much to say about it. You've had a wick below that tested the weekly open, grab some liquidations. Did it really break anything? No, not really. If we reject this and then make new lows off of the current 4-hour, then I would say yes, we're probably going to have any closes that go underneath that 86.4 level. Likely we'll go right through weekly open, go straight back to like 85.3, where we have a lot of massive orders as well. So there's still quite a bit of liquidations, and there's a lot of support down here in general. The big thing here is, right, we did have a deviation. We had a wick below, a close, and then close back above. So until we get some really consistent failures underneath that level, that's still the low you want to see held. The weekly open's been held as well, and we've tested quite a bit of structure. So really simply, no new lows. If we do, what'll happen? You'll lose the weekly and it'll come back down to 85K, potentially down to 84, where there is still a CME gap and where you would expect price to kind of naturally migrate, because that 84 to 85K zone, this is the max pain for the quarterly options expiry on Friday. Again, that's at 08 UTC. So in the local move, very simply, you're coming back up to retest the daily open. Not unexpected with a pretty strong bounce. Watch the reaction here. I'm not expecting too much. I'm actually expecting us to come right up back towards 88K. This overlapping resistance is a potential short zone. Again, once the further we kind of stretch out this range, we're not losing levels, right? We're going into a flat, into a range, which is allowing some metrics to cool off, which means we could easily continue. Now, how do we know we're going to continue? Very simply, you want to see a break above bullish backtest and continuation. Until that happens, you're in a range. Treat it as such. If you make new lows off of the low we just did, then obviously that you treat that as a failure and you come back to 86.5, or excuse me, sorry, 85.3, and then down towards 84K. Besides that, you've got a local upside drive move. Watch the reaction up here at 88K. I think there's a potential short there because you're still in the range. But remember, tomorrow I'm expecting this range to fail going into tomorrow and in the afternoon and evening with the volatility increasing overall with those big data points. So watch the New York pre-market an hour before the New York Stock Exchange opens. The big economic data is definitely going to exacerbate price action. Same thing for Friday. So that's that. Take it easy. Catch you tomorrow.